Good evening, Ledges. Let me fill you in on my day and some thoughts for tomorrow. Please bear in mind tonight that I'm only covering a few things. Invariably, I get people asking, "Oh, what about this?" and "What do you think of that?" I'm not looking to cover everything you could possibly do. It's not a fucking signal service. I'm just going over a few things that I find particularly interesting with the aim that we can come back and revisit them at a later time, because that's much more manageable than if I'm throwing so many different things you could do at so many different levels. So it's very easy if I point out a few things for us to come back and say, did that idea work or not? Now we'll start out with Bund tonight, of course. We'll move on to BTC. From there we will have a look at gold, then we'll take a very quick look at the DAX, and finally we will end with cable. A lot of people were asking me about cable and whether I cancelled my order. I did, but we will talk more about cable at the end of tonight. So just recapping on the day, today was a very quiet day in terms of scheduled news flows, and when I came into it I wasn't really expecting anything from it, because I thought that traders aren't likely to want to do anything other than trade in the very short term ahead of tomorrow's CPI release. And it's often one of those days, as one of my fellow traders in prop used to say, where the scalpers are fighting it out with the robots and big money's almost certainly on the sidelines, and you often get more chop than a Jackie Chan movie. So it's not typically a scenario that I want to engage in. I'll usually just sit back, relaxing with my right hand, and watch all the one-lot traders work harder than a fucking cat trying to bury shit on a marble floor. But having said that, Bund made a mockery of this quiet day I was expecting, and it started trending late in the session. And you have a look at it here in the morning session, and it was up and down like a horse draws for most of the day. No offence to any whores listening. And then just before 3 p.m, we had liftoff. I was seeing it go up in my peripheral vision, and I was looking at it like Harvey looking at Katie Price in that infamous TV interview, and I'm like, hello, you cunt. So I hit up the desk over at News Squawk, and I asked if they had any idea what the fuck was going on in terms of flows in the Bund. And they came back and they said, oh, it's following US Treasuries, and it started trending after Barr's speech. So I was like, well, no shit, Sherlock. I could already tell all that from looking at the chart. But essentially, there was no specific driver in Bunds, so it was just moving off the back of US Treasury flows. So with that out of the way, and I knew there was no specific driver in the Bund, as I told you on Sunday, in terms of my bread and butter setup, I started looking for a trade as it was moving up here. It took out the DSH, which is just an acronym for daily swing high. And this is a 5-minute chart, but if I moved it to a daily, you would see that it just took out this daily swing high, started moving through there. And what I was interested in at that time is seeing if it starts to extend past ATR, I might be able to get a trade in from a mean reversion perspective. So if I just move to the continuous futures chart and put that on the hourly and just zoom out, the first thing that really interested me here was this high, which I'll just put as an hourly level because it is. And remember, this was the high of the rejection candle, which I was discussing right at the beginning of EFL 2024 and saying that we would potentially look to sell Bunds there. We had the reaction a tick ahead of it, but we've already discussed all that. And there's a nice sell-off from there. We're back up and we were just approaching that high. So what I do in a situation like this, and what I did here, is I'll look beyond this high, knowing that it's past ATR, and see if I can key off some 5-minute structure. So when you look at this, you will see that back here, just above where this high comes in, you've got these 5-minute untested lows right there at 135.26. And I was already planning that trade and thinking about offering out 135.26, putting a stop beyond this thrust candle. That high is 135.38, so I'm looking at 39s for the stop, and then looking for rotation back to the 08 swing high that we will have broken out of if we got a fill up at the 26s. So it's 18 ticks back to 08s, and When you compare that to the 13 tick stop, you're looking at a 1.38R, and I would take that trade all day long. But as you can see, if I scrunch the chart up, it hasn't got up there yet. That's what I was planning. So you've just got an idea of what's going on in my head. If the market starts to trend and it's moving past ATR, what I'm doing, looking at the hourly structure, seeing there's a key swing point, looking beyond it, looking at overhead prior lows to try and key off for a reaction. We're not trying to call any major top and any massive reversal, just a rotation intraday. I will likely put that order in tomorrow, even though it probably won't be past ATR. If we close up where we are now, I still like the trade idea. It's important to me that we really don't break the 08s tonight. I don't think we will. We're coming into the close now, but I just want to give you a frame of reference that I'd only really like that if we don't break the 08s high tonight, or in the overnight session as well, because that trade works very well if you're essentially fading a real pop through it on the first time after Frankfurt's come in. So again, that would very likely go in tomorrow, but it is dependent on 08s not breaking tonight or in the overnight session before 7 a.m. tomorrow. And I come in short at 26s, stop 39s it would be, target of 08s. That, just to let you know, will be pulled over CPI if it hasn't triggered before then. And I'd usually put it in a few minutes post the CPI release, just as liquidity starts to come back into the market. So that's just a trade that I'm looking to do tomorrow. But again, I just wanted to cover it because it shows you what I'm thinking as the market's moving higher intraday. So let's go over to BTC. Now you can actually all stop zoning out and start concentrating. So on the weekly BTC chart here, I will admit I've got no real clear bias based on the location of this. I gave you my best analysis last week when I said it looked like shit. But on the daily time frame, however, it looks far more interesting to me, and even, dare I say, somewhat bullish after yesterday's strong up move that recaptured the daily last low pre-break. I've already marked it out as a zone that encompasses the hammer candle low, and then the low of the day after, and then the high of this day prior to the strong thrust through this area. So there is a zone that encompasses those lows and highs. If you remember, we discussed in a previous session how when the market takes out a last low pre-break like this, and it does it in such a strong fashion, it often pivots off it from the other side. So I really like this area in BTC if we come down into it from above. Now, I think the stop is tricky from a thrust candle perspective, because if you were keying off the last high pre-break and putting your bid in there and using a stop, as I often do, below the thrust candle, you can see you're literally stopping out right into the low of the zone as I've defined it. Now, you can sometimes go back with a stop and put it underneath a swing low, although I absolutely hate doing that and never do it. So in a situation like this, if I can't identify a clear stop, what I do is simply not put the order in, but have the zone marked out and watch the hourly price action if we trade back into that zone. So because I'm an hourly time frame trader, when I'm trading my swing strategy, I don't go lower than the hourly. You could if you wanted to, I don't, but I would be watching the hourly, and there's lots of bullish price action that you could get at that area. You could get inside hour failures, you could get bullish engulfings, you could get hammers, but essentially what I'm doing is I'm looking how we trade into it and then seeing if we get something there that looks bullish enough for me to come in off that zone. Now, with this forming an inside day on the daily chart at the moment, if it wasn't to move higher and it was to come down here and trade into this zone, then we'd also potentially have the inside day trap, which could lead to inside day failure. So if that transpires and I'm to get long, then you just bear in mind that you would need to see it back above that inside day low fairly quickly. But if it does fill down here, gets back up above that inside day low, then we've got a clear target, which is the other side of the inside day. Now, even if, let's say, the inside day high breaks first, and maybe we break this swing high and we come back down here a little later on, I still really like this area, but I would most likely, if there's not the potential of inside day failure, only be playing it from one level to the next, the very first FTA. So I would be looking to get in here and then probably out somewhere around here, which is a very, very short-term play. You know, I know some of you will be looking at that chart and going, fucking hell, that's nothing in BTC. But that's how I would trade that on an hourly time frame perspective, just like every other market. But again, if it doesn't take out the inside day first and comes down here, then the target would be bigger because we'd have that potential trap. And in my experience, if you get the trap at the inside day low, and again it reclaims it when it comes off a very strong level like this, it's usually going to run for stops on the other side. So you can see how targets change depending on what I'm seeing on the higher time frames. So let's move on from there. Fucking hell, look at this on the left. Someone got hold of my last ECG. Ladies and gentlemen, Euro GBP for you. Let's move on to gold. Now, gold is very interesting to me at the moment, and I wanted to kind of follow up on this because we have spent some time talking about it on the live day last week, and the key levels that we were talking about is still in play. If we come on to the weekly chart, the outlook at the moment is still fairly mixed for me. We've got almost equal highs and we've got almost equal lows, so we've got essentially stops building up on both sides of the range. But right now, as it stands, the drunk down the pub's guess is as good as mine where this is going to go. I tried shorting this yesterday as my very first trade of the week, and it was a very small loss of negative 0.11R. But I'll explain the rationale behind that trade. What I'd seen, if we actually go back to the daily, is the hammer, which formed after we had created pretty much equal lows in price, and then we'd put this thrust candle in. And if you remember last week, we were talking about the market pulling back to this area, and that would be a potentially good area to bid from. And we saw that it got very, very close to that level, moved away, there was certainly a nice reaction, and then later it lost it in the session. Now, one thing that you will find when you look across charts is that when you see a hammer and you get a thrust candle away from it, and then it comes back and it doesn't stop at this level and it closes down through it, oftentimes you're going to see a run to the other side of the hammer. I've taught that over the years as pattern failure. The hammer is the pattern that's bullish. The market makes a thrust up. It usually returns to the high of the hammer and then goes on the next leg. You got that sermon from me on Sunday about how I realised that because I kept taking that kind of momentum trade, buying as it moves through the high of the hammer, getting well on side, moving to break even, and then fucking puking break even before it carried on. So you'd usually look for the thrust and return for the next leg up. But if it gets back down through that high and it closes down through it, it will usually return to take stops below the hammer. So essentially the hammer would fail, and anyone that's got long thinking that looks like it's going to move dramatically to the upside gets caught and pukes. There was particular context to that idea as well because we had these equal lows on the cash gold chart here, and stops underneath these lows looked, certainly yesterday, very vulnerable in my opinion. So I had the high of the hammer marked out and I planned to trade it. So let's move down to the hourly here. So Sunday night, right after we opened, I put in an offer to sell this, and I put in an offer here at the low of this spike candle just beyond the head of the hammer. And I put my stop on the other side of that spike candle, and I put the target as one tick down through the more or less equal lows. And that stop was wide, although the planned R on that trade, if it had come to fruition, was still more than what I get on average on my swing strategy. But I actually had a plan here to try and add more to this if it started working in my favour and I got onside and it started giving me additional entry setups. So when I woke up in the morning and I got to my desk, I could see that it had turned just ahead of where I wanted to get in. It had turned pretty much perfectly off the hammer high and we'd had a move down. Obviously, when I saw that it had turned off there and I hadn't got a fill, I was fucking fuming. That's a joke. I told you I don't have FOMO. I was calmly sipping my coffee and thinking, that's a shame, I might have missed it. But then it formed this more or less perfect double bottom again on the hourly charts, made its way back up. And I thought this will be a lovely trap for all the shorts here to come up, make a new high above this initial high from overnight, and then go on the next leg lower. So I kept my offer in with the stop and target exactly the same. If it had made a lower low here in price, by the way, I would probably have pulled that order. But because it didn't, I had the confluence of knowing there's a lot of, in my opinion, stops that are very vulnerable to just getting picked off in a short, sharp move, especially beneath the weekly lows and now beneath these hourly lows as well. So I've come in and I've got filled here, let me zoom in, on this candle. Now, I want to try and give you a blow-by-blow feeling of what I was thinking at the time as this trade was playing out. On the close of this candle, after I'd been filled and I could see that I'd barely gone offside and it started moving into profit, I did note that it had closed above the swing high and above that very important inflection point on the daily chart. Now, I knew at that stage that I was onside and it was a hell of a long way to my stop, and I still had plenty of time to get out early if the signs were that it wasn't going to work out. So on the close of this candle, I wasn't full out sweating like a kid backstage on Jim Will Fix It, but I was sweating, more like a trade educator when you ask him for his MyFX book link. So that's what it looked like at the time, and then we get the next candle here. And at this point, I've gone a little bit offside, but this time we've got this shooting star. It's closed back down through the swing high, and it's closed back down through the daily inflection point. And by the close of that candle, an hour and a bit after my fill, I really thought that I had this by the nuts. So I moved my stop from up here down to the high of that candle, the 2 to 3 p.m. candle. Then we get this candle here that comes in on the 3 to 4, and I honestly thought at that point it was a done deal. I thought there was a possibility that we could move back to the low of the shooting star, but then we would go offered there and return to the lows and it would all be over. Unfortunately, it was all over after that. It was fucking all over for me. We moved straight up to the highs. Obviously, I'd moved my stop down. I'd mitigated taking a full loss, but it took me out for a negative 0.11R loss. So it's nothing. I mean, it's a bit beyond the scratch, but it was a little bit irritating because, seeing this price action, I honestly thought that was it. It was going to go. It was going to be a nice, easy trade. It just didn't. It is what it is. Note how after I got filled on my stop, we put in this big candle straight down, and I was so fucking mad. I was so angry. I went full on tilt. Like, I didn't care that it was awful to enter right into the level. I threw my fucking chair across the room. I went full port short. That's a joke. That is a joke. In reality, I took my negative 0.11R loss on the chin and I said, "You dirty little bitch, I will get you when the time is right." And I went and I had a glass of whiskey. And I saw those people I live with, my family, that's it. So, where to for gold right now? Glad you asked. Gun to the head, I think that this is going to break the range highs tomorrow. But all bets are off with CPI. The issue that you are going to, in all likelihood, get here is it's probably just going to take one side of this range out over CPI, and that will be the end of me trying to nail the fucking range break. But if somehow it doesn't take one side of the range over CPI, I'm going to try and get in. Now, I would use this high up here as a potential long to key off if we break through it. So if we break upwards, we haven't taken the extreme high of the range and we start to come back, then I'm looking to come in, most likely off that high. That's all I can say at the moment because this is all I can see from the current price structure. I always go in off the last high pre-break, so that might be a slightly different price location, but essentially I would need to see a 60-minute close through here in order for me to get on board. And again, remember, I want to see acceleration through that level for it to then slow down and come back and I get in on a rounded retest. Remember, space between the break and the point it comes back is super key for me. So I don't want anyone saying, but Tom, it broke the high and I just steamed in on the next candle and it reversed and it's now going down fucking faster than Nico Avocado's waistline. It's got to break and there's got to be space. So I want at least one full hourly candle to trade through this high without pulling back to test the high in the subsequent candle, and then I will go in and I will look for the long. Now, I am not going to want to take that trade before CPI, because on CPI you can get some serious fucking slippage, and at the size I'm trading it could get very nasty very quickly. So if it happens that I come into my desk in the morning and it's broken out overnight and it's coming back here, I'm not going to take that trade, which means I may miss the entire thing. But stranger things have happened than it moving up here and giving me an entry after CPI's out the way. So I'm just going to put that out there. Now, if on the flip side, we absolutely tank and it breaks this daily level, again, the head of the daily hammer, if it gets down through that, I'm going to go short on a rounded retest of that level. My feeling is that if we get a strong down move through this daily level, that it is game over and that we'll go through the range lows. But naturally I got to add the caveat that I fucking thought that on Monday and I very nearly did my conkers, but thanks to my aggressive stop movement there, I didn't. So at the moment as it stands, it's a bit of it could go up, it could go down. Unlike most of the cunts that say this on social media, you know exactly how I'll trade it. So this is the key point to the upside. This is the key point to the downside. Break, rounded retest with space. I've got two very clear targets and I'm going offered a tick beyond the high and going bid a tick below the low if I get short. So Tiago, your question, why are you favouring the short side? I'm not favouring the short side. Gun to my head, I think it looks at the moment like it's going to the upside just because it's been a strong day today, but all bets are off the table and obviously we don't have to trade with a fucking gun to our head. So we're just going to see where this goes and then try and get on board it. But I have these two key points which I think will be the best points to try and frame a trade around. So that's my plan for gold. Could you elaborate what space looks like? Space for me is any candle that's not the next candle back. In the live day we were talking about this level here, this last high. This is a perfect example of space. It breaks up, it doesn't revisit the level in the next candle, then several candles trade and it comes back. It's rounded. Now the more rounded the approach, the longer it takes to get back to my level, the more I like it, because space is essentially time. It's spending time above the level, it's accepting the level, and you'll get that to varying degrees, sometimes more, sometimes less. Ibrahim saying a boomerang is a nice analogy. Yeah, if you just let me do the teaching, thanks. So that's what a rounded retest looks like, and I've been trading this way forever. So let's move on from here to the DAX. Now, I just want to point out a level in the DAX. It's a long way away, but I have to point this out. Note the head of this weekly hammer and where it comes in. If we move that down to a daily time frame as well, and you take a fib and you draw it from the extreme low all the way to the high of the run up, you'll notice that you've got almost perfect 61.8 confluence as well with that level. Now, I'm not a huge user of fibs. I do overlay them from time to time to see if there's confluence at key levels. This is a great level without the fucking fib. It's just, an extra factor of confluence for it. I could already come down here on the hourly and see the point at which I want to get in. You will probably see the point as well. Remember, we're looking at the hourly structure as it moved through the weekly level. And you should be able to see that you've got this last high pre-break, the true last high pre-break, which is the swing high, and then the candle before it at 2 p.m. on the 13th of August is the very last little bit of rejection before we broke up and out of the weekly, and that is exactly where I've got my 61.8 fib. That is exactly where I would bid if the DAX starts coming into that level. And you can probably guess where my stop and target are going to be ahead of time, but just in case you can't, let me tell you. So I'd key off this high. I would run a very tight stop underneath that thrust candle, protected again by the weekly because we're bidding just beneath it, obviously. And I would have a target of these lows, which would give me a 1.37R. Some of you seeing the reactions off these huge weekly levels might be tempted to hold a trade like that. Again, you have to find your own way to trade this, but I go for the FTA. God knows if and when the DAX will get down there, but if it does, I know exactly what I want to do. So all that could possibly happen is if I don't like the price action into it, I could end up cancelling the order, but already I would be able to frame the trade like that. Now, let's finish up tonight with cable. I'd cancelled the cable order. I mentioned it in a reply tweet, but this was how the order looked when I put it in on Thursday. I have not touched this chart. So, can I just get a round of applause for this, please? Comes in last Thursday, picks a level. The market comes into it 4 full fucking trading days later. And it's only gone and stopped in its fucking tracks right at my level with a 3-pip drawdown and straight to the target. I also do children's parties if you're interested, stag do's as well, if anyone's got any requests. Now, jokes aside, look, it wasn't for me anymore because a big part of what I liked about this was the additional confluence of ATR. And I really did not like those lows that were forming as we approached the bid. It's just the R had really diminished. Certainly if you still had the order in by this candle, you'd really have wanted to have pulled it, in light of the fact that a lot of the time when you get lows like this ahead of a level, the level won't work as well. But even if you didn't want to stand in front of it like me, if you're on a lower time frame, could you have possibly framed a trade around it? You can see that this low comes in here. I'll put that in a different color just so we can see it for context down on a 5-minute. Let's put that in yellow. That's the low where you're really just above the area that we're looking to bid. And if you did come down to a 5-minute, have a look what happens here. It takes that level out. It retests it from underneath, hits the higher time frame level where we originally had our bid in. It recaptures it, moves higher. There's your rounded retest that you could potentially trade. Stops caught beneath the lows, into the higher time frame level. Certainly shows that it can't get out of the level. It's finding resistance there. Then it clears it. Then you could get long on the pullback if you trade the lower time frames like this. I don't. I do this on the Bund. I don't do this in the other markets that I swing trade. I'm just giving you a hindsight Harry example. But you'll also be able to see this thing happening in real time off these levels. If you had taken a trade like this and you had got in here, note how it moves into profit and then it comes straight back for the old break-even tap. But going back to this trade, take one thing away from it. If there's no firm reason as defined by your trading plan to cancel the order, have conviction in your levels. Because when I call a level, it's often fucking stopping the market. You won't see many people trade this way. You will see a lot of people out there analyze and trade the market in real time, right down in the weeds of what's happening right now and placing orders accordingly. You don't often see someone just call a level days in advance and then see it react like this. But you saw my analysis on cable, and it's very, very simple analysis. The turn has been called ahead of time based on what? We had a weekly swing high here. We come down and we look on the hourly and we simply refine that weekly swing high to the last high pre-break with a stop of the thrust and an FTA of structure above. And obviously we had an overextension of ATR for the cherry on the top. When you see how complex people make shit these days, you could not believe what I'm doing here could work and that you could build a career doing this unless you've been doing the same thing almost day in and day out for as long as me. I'm actually in my 25th year trading now, and it's been a really long journey. I was 21 when I started. I'm 45 years old now. I dyed my hair blonde. I guess that spells midlife crisis like nothing else. I spent the early years principally from the year 2000 to the summer of 2007 basically doing my arse all day. But it's now been 17 years that I've been profitable and I've been trading this way that I'm showing you now. And I really feel like I've started a new stage in my career, trading prop again with rain, but in bigger size than I've ever been before. So, it's not over yet, but I'm not going to be around forever, man. My dad died of a heart attack when he was a year younger than me. And one day I've got to leave trading behind and go and find all these missing people I think about all day. So I've got to get some of you ledges on this prop desk with me, and someone has to carry the torch for this edge. Someone has to be prepared to sit on a level with the market fucking barreling towards you at 100 miles an hour and step up and take the trade no one wants. Someone has to be here at this huge level at the last high pre-break in dollar yen. Someone has to sit on the bid here when everyone's screaming that the fucking carry trade is over and the Bank of Japan is intervening and it's NFP and the market's dropped 135 pips. Someone's got to stand up here and offer it when it returns here one day. That's your job. No matter how you trade, you put risk first, you watch it closely, but you stand firm, you stand fast, and you're ready. You're always ready to do what no one else is prepared to do. I actually missed this by 0.4 of a pip. After all that, he missed it by fucking 0.4 of a pip. You've got to have some nuts though to stand in front of a move like this. But if you've isolated your levels ahead of time, the hardest part of it is just taking that trade. The saddest thing is my style doesn't even have a name. I would always tell people over the years that I was a levels trader. And they'd say to me, well, what kind of levels? And I'd say, oh, I trade SR levels usually. And they'd go, oh, okay, so you're a classic support and resistance trader, are you? And I'd say, no, I don't buy support, I don't sell resistance. And I ignore almost all the levels that you'd find if you started drawing SR. But I just buy where I believe price will very likely be supported. And I sell where I believe it will very likely be resisted. And there's always a narrative behind it. Sometimes that narrative is bidding an old high after prices run through an old low. Sometimes it's offering an old low after prices run through an old high. Sometimes it's just having an intrinsic feel for where traders' pain thresholds will cause them to capitulate. And there I am, again, ready to relieve them of their position. But there's always a level in there somewhere. To answer your question, we are definitely going to dig into planning and process. One of the workshops that we are going to do is going to be based on creating a trading plan, creating a flowchart of your setup, and then my entire process from translating that into the daily plan to moving the trades after they've been taken into my journal, to filling in the demon finder, to having a weekly performance review at the end of the week. Process is super important to me. And I think that if you get your process down, it will help you massively. No matter how you trade, you might trade a completely different style to me, but it will help you. I attribute a lot of my success to my process. And obviously, a lot of my success is attributed to the fact that I can just call a fucking level like that in cable 4 days ahead, right? You're never going to believe that there was a valid reason to pull that. I know you. You're going to be looking at that thinking, oh my God, I'm never going to pull that if he puts an order in again. But in that scenario where you're seeing an FTA form above the area, it's tricky, and I usually do pull. A lot of the time, again, when you see that structure forming above, you'll have a little pop back to this, and then it will just continue moving lower. If you look at the hourly there, you can actually see that it moves down. The very first hourly candle, 3 to 4 p.m., it can't get back up and out of here. So that low was certainly important to the market. Important enough, by the way, that when we get above it, you can see we key off it. So I'll leave it there. I bid you a good evening. Wish you well for CPI tomorrow. Update me on Twitter how you get on. A lot of people are starting to tweet trades they've taken, and I will give you a comment or call you a cunt accordingly. And speak with you soon.